back to the closing bell. I'm Maria Bartiromo on the floor of the New York Stock Exchange. Stocks modestly higher today as investors take a wait-and-see approach ahead of the Federal Reserve's two-day decision on tapering, which we will get that decision tomorrow at this time. Take a look at how we're settling out on the street today with the Dow up about 37 points. Very much a steady day in terms of volatility. 15,531 last trade in the blue chip average. Volume on the light side today. Take a look. 493 million shares here at the big board. NASDAQ picking up 27.25 points, 0.75% on NASDAQ, 37.45 last trade there. The Standard & Poor's 500 index up about 7 points. It's almost 0.5%. Above 1,700, 1,704, pretty close to an all-time high. The Dow and the S&P 500 narrowing the gap on their all-time closing highs, that's for sure. But Bassani, something tells me the move tomorrow might be bigger considering the Fed news. Question is higher or lower?
You know, I think it's going to be higher, and I know a lot of people note that it drops immediately after the Fed makes these announcements often, but I think they're going to thread the needle on this one, and let me tell you why. I put up the full screen here. The important thing is, overall right now, the markets are expecting a very modest taper, and I think they'll probably deliver on that. Everyone believes, everyone down here, everyone I talk to believes this is not a decision purely on economics. If it was, it'd be a tough call on whether to taper or not. But most people believe Mr. Bernanke wants to begin to taper while he is still in office, and that the cost of QE is now starting to outweigh the benefits. What have the benefits been? Well, we know. They've told us. Modest GDP growth, exactly how much is debated, and we've also had a lift in asset prices. Put up the other full screen here. The cost, though, dislocation in bonds has been noticeable, and emerging markets as well. Bernanke has said that he'll persist with QE as long as the benefits outweigh the risk. I think they've decided that some of the risks are now outweighing the benefits. I certainly believe that. We'll see what happens. As for the markets today, look at the S&P. Folks, we're only 3 or 4 points away, 5 points at the most, essentially from historic highs. 2-to-1 advancing the declining stocks. The volume's still very much on the light side. Home building stocks, another advancing group. They've done very well as interest rates have moderated in the last several weeks. We had the sentiment indicator today, the NHB home builder sentiment, highest level since 2005 on those headline numbers. Finally, the other big movers today, historic highs, and I mean historic highs in Boeing, Raytheon, Lockheed, Northrop Grumman, GD. I think that's a 5-year high for them. Hope you're watching Phil LeBeau talking about the maiden flight of that 787 Dreamliner, of the large version of the 787 Dreamliner today. Nice sight to see that finally in the air. Maria, back to you.
All right, Bob, thank you so much. Joining us now to help break down the day, look ahead to tomorrow's big day, Kathy Jones from Charles Schwab, Rob Morgan from HighTower Securities, David Molnar from HighTower, and our own Rick Santelli. Good to see everybody. Thanks very much for joining us. Kathy, let me kick it off with you. Are you expecting yields to move much higher if, in fact, we were to see the Fed begin the tapering tomorrow?
No, I think it's already built into the market to a large extent. Now, if it's a much bigger taper than 10 or 15 billion, then we might see a market reaction. I think the bigger issue is in their economic projections. They have a real dilemma here because they're most likely to revise down their growth and inflation projections at the same time they're going to start tapering. So how they manage that is probably more interesting than a taper announcement.
Is there any chance you think the Fed doesn't do anything tomorrow, no tapering?
Yeah, I think there's a chance because if you do look at the economics, they don't indicate that there's a real strong case for tapering. But I think what's happened is they've laid out the case, they've prepared the market, they've signaled it. It's probably time to get it going.
Rob Morgan, let's talk about how you allocate capital here. You're overweight financials, industrials, and technology. Does any of that change with a change from the Fed?
Well, actually, Maria, I really just at the end of last week went to that overweight on industrials and technology because from a technical standpoint, it seems like the market, the equity markets anyway, to agree with what Kathy's saying on the fixed income side, equity markets have really fully digested the tapering possibility tomorrow. And from a technical standpoint, the cyclical sectors are looking better, which prompted me to upgrade industrials and technology, as I said. So now, I guess back to what Kathy said, if it's a larger taper or if they change the timeline at all, then that introduces some uncertainty and might have to reevaluate.
Yeah, I'm wondering, David Molnar, what happens in terms of the language? Would the Fed use language to actually make his point, Ben Bernanke make his point tomorrow? Or do you think if we, in fact, don't get tapering, then there's a credibility issue on the part of the Fed?
Well, absolutely, Maria. I mean, I think the Fed's going to come out with some very dovish language. I mean, the expectation, I agree with the prior guests. I mean, tapering's probably in the cards for about 10 to 15 billion. That's what the market's expecting, and we think that's what the market's priced for. But at the same time, the Fed's got a challenge on its hands with the backup in long-term interest rates that we've seen. We think they've gone way beyond what the Fed wanted to see or what they expected to see with respect to when tapering was first introduced a couple of months ago. So the language they use is going to be critical to setting further expectations that tapering is not tightening. I think that's the key critical message they're going to want to get out. Whether the market believes it or not remains to be seen.
That's a good point. It's true. Tapering is not tightening, and probably Bernanke is going to want to stress that in that press conference. Rick Santelli, if the Fed does nothing, do you think the market reads that as a big negative? In other words, okay, the Fed can't begin the tapering the way it wanted to in September. It must mean this economy has worsened quite a bit.
Well, if they didn't, that's for sure the message that everybody would get, and I don't know how anybody could argue that, but I don't think that'll be the case. But I really think that we are now talking about the psyche more of traders. I think that the real story here has nothing to do with the statement or the language. Of course, that's important. You know what it has to do with? Outflows, redemptions, bond funds. I look at it a little differently. They have already priced in the fact they don't want to be in Bondville anymore. If the taper officially begins tomorrow, that message may get even bigger. If they taper smaller, many may believe, we have a little bit more time to make that decision. But I think there's no way to slice it positive for interest rates. The equities, certainly, they would just absolutely fly if the Fed did nothing tomorrow. But I think that in the end, it's about the economy, and it's going to take a while, I think, before we really understand that the equity price we see for the Dow or the NASDAQ or the S&P is the real deal or not. And I think tomorrow will be the first step in getting that GPS back for equities.
Kathy, how do you want to invest in this environment, putting the Fed aside? What do you want to do, knowing that we may very well get a tapering tomorrow?
Right. Well, I think a tapering is already built into the market, and we have seen a lot of rotation out of long-term bonds. A lot of it's gone into shorter-term bonds, so it really hasn't gone out of bond land necessarily. A lot of it's just rotated into floating rate notes and shorter-term bonds. You know, we think intermediate-term duration makes sense. You still get a pretty decent bang for the buck in the middle part of the curve, and that's actually rallied in the last couple of days, so that's where we'd be positioned.
What about internationals? I mean, do you see interest right now in corporate bonds, emerging market corporate bonds, European? A lot of talk that these areas are, well, Europe has bottomed and perhaps emerging market is beginning to bottom.
Yeah, I mean, we saw such a big sell-off in emerging markets over the last couple of months that they're certainly more attractive now than they were a couple of months ago, but there's probably a little bit more downside there on the currency side, perhaps not on the interest rate side. Europe is looking a little bit more attractive because it has lagged behind the U.S., so we think there's some room to catch up. But by and large, the developed markets are likely to all just move together.
All right, we'll leave it there. Thanks, everybody. Appreciate your time today. We will see you soon. We want to get to an earnings alert right now. Adobe Systems has reported. Dominic Chu breaking down the quarter on Adobe. Over to you, Dom.
Well, Maria, let's get you up to speed on the numbers. First of all, earnings per share coming in at 32 cents. That beats the average analyst estimate, or rather just falling short of the average analyst estimate of 34 cents per share. Revenues also coming in a little bit lighter as well, $995 million. The average analyst estimate was for a little over $1 billion. Now, here's where the optimism might be coming, because you can see right there the chart. We're up maybe about 4 or 5% here now in the aftermarket session. It's